you've got the main business, franchise consultant. You essentially work with folks for free, but on the back end, these franchises, they pay you a big lump sum of money each time one of those deals closes. And they're motivated to do it because they're going to make a ton of money off that franchisor. And the franchisee is in a great place because they're going to make a ton of money if they run that franchise successfully. And it all comes out in the end. So it's a great example about having and that's you actually bought into a franchise there as well. Is that correct?
It's like a franchise. I didn't have to buy into it, but yes, we have a consultant agreement. We're trained by a corporate office. I pay royalties like a franchisee. So we're set up exactly like a franchise. So I can walk my talk as a quote franchisee. I'm not, again, and when I'm telling you, look, you're going to pay these fees and you're not going to begrudge the franchisor that, I can be like, yeah, because I've been doing it at a maximum level and I would never bite the hand that fed me. Right. So I'm able to talk from my firsthand experience to my candidates. Yes.
And I think that's amazing. And so you've got the franchise consulting business, and then you've invested, it sounds like, into a number of other things, mostly in the stock market and equities. It sounds like you've done some syndications. Talk to us a little bit about the other types of investments that you've put money into to then, have that money working for you while you continue to focus your energy on your main business, your money-making machine.
Yep. So as I've got into this sort of alternative investing world, I took all of my money out of the stock market, except that which was in my, my self-employed pension plan. So I didn't want to take the tax hit, but I stopped contributing to that. Once I realized that cash flow was really what this was really all about, and having full control over the growth of that and creating tax advantages. Once you start learning how the wealthy really get wealthy, it's not in the stock market, right? So that's when I started funneling my money out. I invested in 2 really sizable infinite banking policies to funnel all of my cash flow through that. Then I take the insurance company's money to go take the money to then invest. Like I made an investment. I got 5% equity ownership in a company that pays me amazing dividends every year. I took money from my infinite banking policy and deployed it into that. I took money from my infinite banking policy to invest in, I have a couple apartment syndications with other people that's their full-time job, right? But I'm totally passive. And some of that's diversified in ATMs and storage facilities and mobile home parks. And then some of it's in real estate syndication. So I have several of those. So my tax return's getting a little bit complicated at this point. I have some crypto. I've invested in 2 crypto mining businesses, one brand new startup that I keep saying, oh my God, I think I just threw away that money. But you know what? Sometimes you're going to win, sometimes you're going to lose, but that was a lot of money. At the time I invested, the crypto was going up and projected to be, at like 200 and it was like at 30. So whatever, it is what it is. Maybe it will turn into something, maybe it won't. But I have another crypto mining business that is more established business that is mining for crypto and making some small profits there, but hopefully, those will turn into things. So that's like the small percentage of my portfolio that's the most risky. The rest of it's just, paying me monthly and quarterly dividends in those syndications.
And outside of the income and the growth and all those other things, I assume there's some tax benefits that you receive off of those.
Yeah.
Do those make an impact for you? And
I need tax advantage because my, consulting is like, there's absolutely no shelter, right? I mean, I am an it's almost ridiculous to try to grow the business that I'm in any bigger than it is, because all you're doing is just, doubling down on the government. No offense. I want to be a good patriot, but I do my fair share and then some. So as you learn, again, you get smarter, you realize there's a better way to earn money and invest money. And it's just all about a growth trajectory, right? And so long term, I see myself not being so much as a full-time consultant, but more in that mastermind, running masterminds with franchisees and keynotes and then creating online passive programs that will help people that are business owners become more successful business owners and writing books and things like that. That's where I think the next 10 to 15 years will go.
And that kind of moves you from this place of you make money based on the time that you invest to get that client over the finish line to a place where you're getting not only fulfillment of helping these people, but you're actually taking all of those skills, teaching in a much larger environment. So I think that is a really smart path. What was it that attracted you to investing in those types of opportunities, moving your money out of the market and into things that are really run by other people?
I met the people, right? I was guest on their podcast actually. And the first thing that happened was when I met Jim Oliver, who is like the man in infinite banking, and he found me and wanted me to, because he loves franchising and wanted me to help educate his community about wealth building through franchising.
Yeah.
And he's like the most abundant person I've ever met in my life with the most amazing life story. And I got fully kind of sucked into, well, how do you do what you do? And as he told me, he went from, he educated me on his experience and moving from, managing, stocks and people's money that way to meeting Nelson Nash and then getting into infinite banking. Mm-hmm. And I was like, wow, that just makes so much sense. And he sort of networked me as he became a mentor to me and then a personal friend to me. He networked me into these relationships with people that I could trust for these alternative investments, because that's the key, right? You're not just going to give 150 grand or 200 grand or 500,000 to somebody that you don't know. There's got to be some connection to the person. And so I found some really great people, and they're doing wonderful things with my investments.
Yeah, trust is such an important part when it comes to investing. It's like you kind of need both. You need the knowledge to know, hey, is this a good opportunity? Should I be investing in this type of strategy? And you want to have great relationships with those people that you have trust. You almost need to have more trust, because at the end of the day, you're trusting that business owner knows what the opportunity is and how they're going to then get paid based on that. Right. And when you have alignment of interest where they get paid based on success, then you're kind of in the ideal position. And I think from a franchise perspective, there's some alignment with the franchisor and the franchisee. They want the franchisee to have success. So what I'd love to talk about, because I think it'd be helpful for the audience, is they're kind of weighing what some of their options are. What are some of the benefits of going down the franchisee model, and what are some of the trade-offs that you have? Because obviously somebody has the option to go create their own business. There's a lot of upsides to that. There's a lot of downsides to doing it yourself. But, what I'd love to hear is what are some of those pros and cons of going kind of the franchisee model?
Right. So the biggest advantage to investing in a franchise, if you're thinking about starting a business, is that you're partnering yourself with people who've already done it. So the whole thing when I'm working with people is I want you to find your people. Like most people who think about a franchise, they think about what they know, they think about what their community needs. We're going to take all of that off the table. It's so irrelevant to your success as a business owner. What really matters is you find people that have a vision for bringing a brand to market. We're able to look at their track record of success to say, okay, based on what they've done in the past, as they explain their future, I'm reasonably sure that they're going to get where they're going. We look at how they're capitalized. So what you're doing is you're buying into their vision for the future. You're finding a culture that inspires you, where you can be open and mentored and feel like these people have what you want. And so you're kind of raising your hand saying, pick me to take your business model back to my community and help you bring that national brand to market. That's ultimately what you're doing. So you're buying down the risk of starting a business because you're partnering yourself with people who've already figured it out. They've created the tools, the marketing, the training, the technology. They have national buying power. They created all of that. So it's more turnkey versus an entrepreneur who has an idea and then has to stop and create all of those tools, which is inevitably what leads 90% of startup businesses out of business. Mm-hmm. So that startup statistic of failure, it's not owned in franchising, because when you invest in the franchise that's already proven, it's already made it past that statistic, right? And now they have something that they can replicate, that they can, quote, sell to you and then coach and mentor you. So to help bring their bigger vision to market, which is to build this national brand using other people's money and time.
Thank you for listening to the Investor Mindset Podcast. If you like what you heard, make sure to rate, review, subscribe, and share it with a friend. Head over to theinvestormindset.com to join the Insider Club, where we share tools and strategies from the top investors and entrepreneurs on how to take it to the next level.